Hi, good afternoon, everyone. So I'm Darren from Investing Note. Thank you for joining today. So the topic for this sessions is how you can profit from the market under Joe Biden's presidency. And today we have Jay as our speaker for these sessions. So a quick introduction for Jay. With a keen interest in trading and investing, Jay followed his passion and embarked on his trading journey in 2009. Reading dozens of trading books and attend numerous trading programs, he found consistency and has been trading independently for the last 10 years. Okay, he has been trading the market actively since 2011 and is well versed in equity, option, and index trading. Having traded each of these market extensively, he built his trading philosophy on the concept of consistency. Okay, so now if you have any questions during the presentation, please type it into the orange box on your right hand side. Okay, so we will have time for Q&A section. Without further ado, let's welcome Jay. Hello, Jay, are you there?
Hello, hi Darren.
Hello. Okay,
hi,
so I
guys.
will pass the time to you.
Okay, thank you, Darren.
Yeah,
thank
thank
you.
you.
All right, hi guys. Can you hear me loud and clear? If you can hear me loud and clear, right? Yeah, maybe you can just let me indicate something. Yeah, so at least I know you can hear me. So, welcome to the Invest 360, and my name is Jay. So, over the next 25 minutes, I'll be sharing with you how you can be profiting from the market under Joe Biden's presidency. Okay, so allow me to share my screen first. So, here we go. Okay, if you cannot see my screen right later, just just reflect it, feedback, let me know. But if everything is okay, you should be seeing my screen right now. Okay, and any one point in time, right? If you have got any questions, just type it into the chat, the Q&A section, because I'll be looking to my right because my browser is there. I will be able to look at your question. And we look forward to have a fruitful and value adding 25 minutes ahead. Okay, so today's topic, right, it's about how can you profit from the market and under Joe Biden's presidency. So you may be thinking, very weirdly, how come I'm here in Singapore? You don't talk about our government, you talk about Joe Biden. Well, because I am an independent trader and I trade the US market extensively. So for some of you, right, that are hearing me for the first time, this is what I do. I'm a full-time independent trader. I've been trading for near to 11 years. Of course, in the first few years, it was really the blind leading the blind, don't know what am I doing, and just chasing, whatever methods that I can get my hands on, thinking that there's a holy secret grail, that kind of journey. So today I've progressed beyond that, and I'm a full-time independent trader. So my bread and butter, my main focus is in the US stock market. So in Singapore, well, I do have some investments, but I'm not very active here in the Singapore market. But in the US market, that's where I'm very active. I'm buying, selling, taking on a swing and positional trade perspective. All right. So yeah, great to know all of you. Okay. And if this is not the first time that you're hearing me, probably you have caught me at one of my events. So I made my debut at the Invest Fair 2019. Then I was also actively engaging the clients of brokers over here in Singapore, namely like City Index, CMC, CGSCI, MB. Although that is to the Forex side, then you have Traders Fair and Share Investment Outlook, etc. Okay, so this is pretty much what I do since 2018. Sharing my insights with retail traders like yourself. And this is what we are going to do today. And to kickstart this year, right, 2021, I've decided, because right now, just to give you a little sneak preview, in a sense, I'm writing a book. So my book is finishing soon. So at the end of this presentation, right, that means if you stay right to the end, I know now it's lunchtime, and to reward you for staying with me through the lunchtime, I'll be giving away this book to you for free. I will let you know how can you get this book. Okay, I'll let you know how can you get this book. Where do you register to get this book? Okay, all right. So now, spot on, 5 minutes. So let's dive straight into what has happened. So 2016 November, that was a watershed year. That was a year that was controversial. But what follows after that, it was phenomenal. Why did I say that? Because 2016, right? When Donald Trump was going against Hillary Clinton, I think Americans are not ready for a female president yet. And therefore, I think Trump won with a resounding victory. And yeah, and there goes his presidency. And the first thing that he did, right, was to shake up the financial markets. Guys, can you remember if you've been trading for or investing or trading, right, in the last 4 5 years, right? Um, Donald Trump can be your really good friend, or it can be really your enemy. So it really depends on whether his tweets are in your favor or not lah. So one of the first thing, right, if you guys can remember, one of the first thing that he did, right, he was to shoot the F-35 program. Who makes the F-35? Lockheed Martin. So he just tweeted, and that was even before he was inaugurated as a president. That was, I think, in December 2016. So he shot the F-35 program, saying that it's wasting taxpayers' money, it is way over budget, it's costing too much. And what happened was Lockheed Martin dropped about 6% following his tweets. So that was a sneak peek or a preview of the kind of presidency style that he will bring in. And this is what we have witnessed in the last 4 years. So that was really just one of the many, many things. And then he signed a lot of executive orders. The Donald Trump, he just keeps signing. I want to build a wall. I want to prevent people from coming in. And yeah, that's all the drastic measures that he did, protectionist. Whether you agree with him or not, well, we got to say one thing. If you have traded or you have invested in the last 4 years, you got to love him, isn't it? You may not like him as a person. Maybe you love him, you adore him as a person. I don't know. I'm not here to comment on that. But when it comes to the market, can we all agree that he is very friendly for the market? He is awesome. He is brilliant for the market. Why? Because he is a businessman. When he took over, Dow was about 18,000 points. So thereabouts, Dow Jones, Dow Jones 30 is about 18,000 points. And right now, today, it is above 30,000. And similarly, if we look at the S&P 500, so today, if we look at the S&P 500, we are able to see that it was around 2,100 points. It was around 2,100 points, and then it rallied, and then that come the volatility. The volatile periods where the market crash a bit, then it climb, then it crash a bit again, then crash further, then it climb, then came COVID. So the last 4 years of the market, right, it is unprecedented. Why? Is because, right, we are looking at higher volatility. So why am I bringing up all this? Because this will have impact moving forward. So what was our takeaway during the market in the last 4 years of Donald Trump presidency? Now, number one, we are looking at increased volatility, meaning last time, right, we are not so used to, like, before Trump, when we are still during Obama. Well, when I first traded, it was already Obama, and it was 2 terms of Obama. So under Obama, under Democrats, the market was more subdued. The market was trending, but not so fierce. Today, if you realize the trend angle, it's crazy. It's all very steep. So under Donald Trump, right, we have increased volatility. It is very common to see the more than 1% kind of movement per day on the market, because usually that time during Obama, right, we are looking at somewhere ranging from 0.5 to 0.7%. So more than 1% days are a lot more frequent. And therefore, right, when we look at a pullback, you have this kind of sharp pullback, more frequent, because usually once a year. Usually we have it once a year, somewhere between the period of August to October. Then you will have a 5%, 10% technical pullback. That is very normal, right? But under Donald Trump, we are starting to see like 15% pullback, 12% pullback. And yeah, like, periods like this. Let's not care about the COVID first. The COVID, we have an external event. But apart from this, right, all the drops here is short, sharp, and fierce. So we have the market is more, higher unpredictability. So this is what we have witnessed, or at least experienced, in the last 4 years of Trump presidency. But we cannot deny the fact that, well, he is friendly for the market because of the stimulus measure, because of the stimulus measure that was unveiled, especially from 2020 onwards due to COVID. Joe Biden just passed his first fiscal stimulus, which is a 1.9 trillion package. So he saw the market went from 2,100 all the way to 3,700. And that is phenomenal. That's crazy, isn't it? It's more than 50%. That's about 70-80% rally during Trump's presidency. So if you were to count, right, 4 years of Donald Trump, 4 years gives you about 80%. So on average, right, 1 year, you are looking at 20%. And here we are not yet even talking about technology stock, We're not even talking about technology stocks. Technology has ventured way beyond this. Okay. So is overseas viewer entitled to free book? Yes. Because it's an ebook. I'm going to release it on the Amazon. Okay. So it's an ebook, and obviously anywhere in the world, as long as you're internet, you'll be able to have access. CrowdStrike affected as a close relationship with Donald Trump. Well, after this presentation, right, I think you may want to look at something else. Okay, you may want to look at something else. Okay, so let's get back to here. And knowing that now Donald Trump is like this, right? I always my framework of trading, right? I'm always looking for strong stocks. Okay, I'm looking always for strong stocks or strong sectors, because I believe, right, that my money is insignificant, even though with hundreds of thousands, even though if I have $1 million, right, it is insignificant in this financial market. Why? Because the market is talking about trillion, it's talking about billions. Unless I have $1 billion, then yes, I'm able to move a stock. And even so, I can just move 1 or 2 stocks. I can't move everything. So it is a collective effort of all these institutional investors, the funds that are moving the market up, higher or lower. So it doesn't really matter what you think. It doesn't matter what I think, because all of us add together. I don't think we have 1 billion. Okay, let's just put it this way. So I'm always looking for strong stocks or sectors, because that tell me one thing. That tell me that there is money flow. So when there is money flow, okay, especially I want to see money flowing into an asset class. Therefore, the asset class prices will go up. So when there is money flow into sectors, into the stock, what will happen to the asset price? Generally, it will go where? Go up. Just like Singapore, right? The property prices are very buoyant. Everyone is saying, that, wow, COVID, there's a crash and all that. Never, property prices never come down. Instead, it went up. Okay. And it was one of the best months ever for December 2020. Why? Because there's a lot of money flowing into that. So I bring that up as a side example because I am looking at that myself. So when we look at here, right, how do we define strong? So there must be a basis of comparison, isn't it? I cannot just say, hey, I'm strong. I'm strong relative to what? Obviously, I will be stronger if you compare me to a school kid, to a young kid, to maybe a baby. But if you compare me to those people who, like, wow, Mr. Olympic and all that, you think I'll be stronger? No way lah. That they will be able to fling me off and throw me out anywhere they want. Correct? So strong, there has to be a relative, there has to be a comparison basis. So in this sense, right, when we look at the market itself, so this is the S&P 500. The S&P 500 gone up by 80%. Okay, gone up by 80%. So when we want to look at strong, so what industry stocks to look at? So under Joe Biden's presidency, that's what you are here today. Okay, so stay with me. I'm gonna go slightly faster because of the limitation in time. So S&P 500, we are looking at discretionary. This is one that is very strong. So guys, write this down. Okay, write this down. Discretionary, technology, that was in the last 4 years. These are the strongest ones. Okay, so the market is buoyed largely by these two. And of course, you have communication services, which some of it comes from like Disney, Facebook, Google. They are from here as well. Healthcare has been doing quite okay. So this is in the last 4 years. Okay, this is in the last 4 years. Then so now, if you want to know what is responsible for the market that was, before, right, discretionary and technology. So now, right, because of 2020, we have the coronavirus, we have the COVID. So what happened was the unprecedented, minus 35% in 23 bars. So that is about 20 days, 20 days or so. That's about 1 month. So in 1 month, right, the market just crashed. The market just tanked. And everyone got scared the shit out of them. Why? Because previously the market was just rally. 2019, if you remember, 2019, the market rallied like 20 over percent. So suddenly just 35% snap. Oh, the bull market has ended. Can you all recall the headlines? Yeah. So what followed after that is what the new market norm is right now. And Joe Biden is continuing this legacy or this tradition, which is stimulus. So what is stimulus? Literally, we put it as, or we know it as quantitative easing or printing of money. So what they print the money, what they do, okay, they hand out the money to individuals. That's for the Corona package, but most of them, right, flows where? Flows in a big corporation. So Joe Biden, right, just unveiled his 1.9 trillion stimulus. So it's just like a drug. I'll akin this to a drug. If you're so used, right, to spending your lifestyle based on not just your salary, but also X amount of credit, there is no way you will be taking away this credit. Agree? Because that's your salary, that's your credit. There's no way you will do away with it, because it's like a drug. Once you take away this, you will not be able to, to sustain your lifestyle. Let me just put it this way. So this is exactly what US is doing. So to get a clue, right, of what is going to happen, I'm going to make use of the New World Order, which is the post-COVID low, and that was on the 24th of March. It's on 24th of March, and that lead to the market breaking the all-time high. And right now, just recently, we have all-time high above 3,800. Okay, so and of course, yesterday it came down a little bit, but I don't think this market is bearish yet based on the things that I see. So the $1 million question is, what's next? And this is where I'm going to answer the question here. What industry should we be looking at? So here is exactly what I'm looking at, okay? 24th March. I'm looking at 24th March as the bottom. The market has rallied about close to 58%. Okay, guys, are you seeing this? Yes? Am I giving value? Okay, great. So now we have 57% over here. Okay, we have 57, 58% rally. So what are the sectors that lead the market out of this rally? Which were the sectors that have money pouring into? Okay, which are the sectors receive the money? Okay, the investors' money or the institutional money? Discretionary, obviously, number one. Silently at the back end, the king of the thing, right? This is materials. I know every one of us are thinking, wow, Bitcoin, Tesla, Google, Zoom, all technology, right? All these big names, right? The stocks that I'm trading at are never on the news. Not say never, rarely. Like, for example, one of my two favorite stocks that I still have in my portfolio right now, I have Caterpillar, I have Deere & Co. Are they on the news? Do you recall hearing anything on the news about these two companies? No, right? But look at the chart, you'll be shocked. They rallied. They just rallied, and they just silently in the back end, and then just go. Okay, so materials, industrial is worth looking. Technology, contrary to popular belief, everyone is thinking, what, technology. Yes, they are one of the leaders, but they are not the strongest. Okay, they are not the strongest because the funds cannot be overly weighted on technology. They have to balance it out a little bit. So the lagging sectors, right, are likely going to get a rotation from time to time to, climb up. So staples is definitely out. Energy, I'm staying away. I don't like because it's intrinsically linked to oil price. Okay, I don't like that. And of course, discretionary. Okay, so guys, here is the conclusion. We look for discretionary, we look for industrial, materials, as well as technology. These are the four sectors, the four leaders on the market. So we look at these sectors knowing that, hey, the money is flowing into this sector. And when the market corrects, I want to know how these four sectors perform. Because if the four sectors come down a little bit, and what we have, it is a phenomenon called rotation. Okay, called sector rotation. That's where the money, is too overly weighted, too overly heated. They got overweight down a little bit. Okay, they will rotate out, and then the money will flow into other sectors for them to catch up a little bit before the reposition. Okay, so sector rotation is ongoing. Currently, right now, we are looking at these few sectors: discretionary, industrials, materials, technology. Okay, and of course, what stocks and how do we find the stocks that we are going to be looking at? Okay, so this is where, right? This is where I go to a case study. So this is exactly where I get this chart from 24th March, right? So let me just pull up this on screen annotation. So over here, you can see we have the S&P 500. So discretionary is one. Then after that, just now we talk about industrial, materials, technology, financials barely there. This is about there. So just take a look at that. Okay. So discretionary, industrial, materials, technology. So after knowing where to look at, okay, now I want to know what to look at. So I will head on over right to this website, which is sector SPDR. As you can see, technology is huge. It used to be 28% because I track this every single week. 28% of the S&P 500 is technology. Right now, it's only 26.98, which is around 27. If you factor in communications, that's about 10%. Okay, and all these are tech companies as well. If you look at Alphabet, Facebook, all these are tech companies. Netflix were from there. Okay, discretionary used to be about 10%. Now it has increased. So what are some of the stocks that are worth looking at? So let us first look at materials. Okay, shall we? Because materials have outperformed by a lot, isn't it? So we go on over to the thing, and then we go to the portfolio. So from the portfolio over here, right? On the portfolio over here, you can see all these names, right, that probably you have not taken notice before. Okay, this is my favorite. Lindy PLC, Air Products. These two are good, are great, in fact. Freeport McMoran, they are strong. Dow is over here. PPG Industry, Sherwin-Williams. So just to give you an idea, okay, just to give you an idea. If you look at Lindy PLC, right? So let me just switch back over to the charts. So you look at Lindy PLC. Didn't it climb? It did, right? It climbed by quite a fair bit as well, right? Because if you look at the bottom all the way up, it rallied about 80% as compared to the overall market. So when you look at Lindy PLC, right, did it climb or not? Have lah. And did it go on news? Like, wow, every day on news one? Never. So the prices were more predictable. And here is one of my favorite. This is the company that I'm traded, that I'm still currently in position. And am I happy with this position? Yes, obviously, because look at how much it has rallied. 200%, guys, near 180%. Just look at this, okay? 200% in 204 bars. And that is about almost 1% per bar, okay? If you think about this, right, this is a no-brainer. Is it on news? Again, it's not on the news. So I like companies like that. I don't like companies like Tesla. Not that I have anything against them. It's just that I don't like sentiment-driven companies because sentiment can be inflated and deflated almost instantaneously. Okay, make sense? Okay, so you look at Caterpillar, this is under industrials. Okay, this is under industrial. And if you want to look at, let's say, discretionary. So you just click on discretionary, you go on over to the portfolio. The biggest one would be Amazon. Biggest one will be Amazon right there. Then you see Tesla. Tesla has been going up a lot recently. So, and propelled Elon Musk to be the richest man in the world. So if you look at all these stocks, right? Okay, even you look at Target Corp. Isn't it strong, guys? Isn't this strong? Everyone looking at Amazon, right? But nobody took attention to Target, right? From the bottom to the top, it's about 120%. So all these stocks, and recently they got a strong boost. And is it no good? Good. It's great, in fact. Why? Because they are not on the news. That's the kind of stock I like, because there will be not much sentiment affecting it. Okay, so this is my style of trading. Okay, so guys, because of the 30 minutes, it's a very short presentation. So I would like to go back to the slides. Okay, just very quickly, just let me tie it up. So very quick recap. We have market under Donald Trump, the strong sectors. You know how to find the top-down approach. So guys, here is the giveaway for you. Here's the giveaway for you. I will leave this screen up here for 1 minute. Okay, for 1 minute. I know that today, I just only have about 25 minutes to share with you this concept, which is very, very, in very short time, and therefore you can hear that I'm speaking a lot faster. So, U.S. holding companies, one of my views and all that, guys. Trust me, go and get this book, because what I just mentioned, right, in this book, I expand on it. I got all the concepts in here, and I'll be sharing with you my TS square framework of how I find all these stocks and then how I do swing trading on the stocks. Okay, so just head on over, right? Just bit.ly/invest360J. Okay, my name is Jay, and if not, just scan the QR code lah. Especially Singaporeans, if you tell me you don't know how to scan QR code, right? Habis lah, something funny, something wrong already. Every mall we go into, every shop we go into, have to scan QR code, right? Okay, so scan the QR code or head on over, fill up the form, and then when the book is it's going to be ready really soon, and I'll be sending it to your email and share with you how do you get this book for free. Okay, so this is my gift for you. This is 2021. Happy 2021. And it's my pleasure to be here. Hopefully you have learned something valuable in this short 20-30 minutes. And yeah, that's all. So guys, if you have any questions, just type it in the chat. Okay, so how do I identify strong stocks? Read this book. Sure answer one. How about US holding companies? I prefer from a top-down approach, using the individual companies itself instead of holding companies. Like for example, Baba. I'm not too keen in Baba personally, because it is a profit vehicle. So it's not like the Alibaba is listed there. It's listed in Hong Kong, but that's a special profit vehicle. So I don't really like that. And yeah, nothing against that. But if you are doing it, just know the risk that you're going into. Okay. So guys, go and get this book. Okay. Thank you.
Yep. So just get this book and you will learn a lot from there, right? Great.
Yes.
Thank you. Thank you, Jay, for sharing with us and on which sector we should look at. So the next section will be start very soon at 12:45 p.m. The topic is how to exactly live off dividend in retirement by Willie. Okay. Last but not least, remember to click on the virtual hall at the top, and we have some surprise for you as well. Okay, thank you again for joining us, and thank you, Jay, for sharing with us. Okay, we'll see you on the next section. Thank you very much, and bye-bye.
Thank you, guys. Bye.